where they don't belong, whether wrong or right.
Yes, your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning, we are looking at household debt, or if you want to call it household costs. It's just spiraling out of control. So we're going to take a look at some of these details, these charts out of zerohedge. But at the same time, this is the crazy thing, people. At the same time, we've got, out of Reuters, we've got news that Cyber Monday sales are projected to hit a record $9.2 billion. What is going on here? Are the American citizens in denial, delusional, all that stuff? What are we doing, people? What are we doing? Going into debt to feed into this consumerism that we've been brainwashed to participate in maybe since the 60s, 70s, you know? We'll take a look at that as well. I thought that was interesting to see kind of the opposite spectrum in today's video. And you wouldn't believe it. This is something else, and I guess we could just talk about this out of the gate. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. I couldn't believe this, people. Senator Rand Paul, this is crazy what he's proposed. Essentially, he wants us to pay off our student loan debts with our 401k. What do you think about that? I just had Ted Seidel on. If you guys missed that kick in the session, definitely want to check that out. We talked about pensions and 401ks, how they are just, first of all, the biggest ripoff in the world. I'm talking about both 401ks and pensions, and the shortfalls that most of these state pensions are facing, and they're not being real with us. You know, they're not being real with the people in pensions about how far below the target they are for meeting obligations with these pensions. And not even to talk about 401ks, what a scam that is, the fees that you incur year to year, and how at the end of the day, you know, it's not going to benefit you in 20 to 30 years when you need it. But anyhow, this guy, Republican out of Kentucky, which ironically enough is the state in the worst condition when it comes to pensions, they are on the verge of calling it quits, needing a bailout. But anyway, he's talking about we should just pay off our student loans with our 401ks. That simple. And his legislative proposal is this new act he's calling the Helper Act, which is the Higher Education Loan Payment and Enhanced Retirement Act. He says will have you covered. Wow. So the Helper Act, really quickly, just to go over a few key points of it, is tax-free money for college, the ability to withdraw tax-free and penalty-free up to $5,250 from your 401k or IRA annually to pay for college or to pay off student loan debt. It also will pay for dependents, so the ability to pay tuition expenses for a dependent or a spouse. It'll also offer tax-free employer-sponsored plans. Employer-sponsored student loan and tuition plans would become tax-free up to $5,250 annually. No cap on student loan interest deductions, and it creates an incentive to save for retirement. One goal is to encourage more investment into 401ks, which can then be used to repay student loan debts. Employees could also opt to receive employer contributions as after-tax Roth contributions, meaning employees would not owe taxes in retirement on their employer contributions. So, first of all, just to see that this guy has the unmitigated gall to even propose such a stupid idea. Why would anyone pay off their student loan debts with the monies that are supposed to be used for the retirement, which that won't even be enough money? So you want us to pay off our own debt while the United States continues to pile on its debts. No one's talking about paying that off. I think this is the most stupid idea I've heard in some time now. You guys let me know your thoughts. There are some critics of his plan, and let's see what they say. They're saying removing money from a retirement account to pay off student loan debt or any use that is not directly related to retirement may not be a wise financial move. It also says that many student loan borrowers cannot both save for retirement and pay off student loans, so often must choose one or the other. The annual amount is a start, but may not be sufficient to help borrowers make meaningful impacts. And you know, these types of proposals, this is, you know, why these types of things happen. These type of proposals or legislations get pushed to the forefront for voting is because these senators and many of these congressmen and women are out of touch with reality. They have no clue what's really going on. They're so out of touch with their constituents that they propose stupid ass things like this. People, I'm sorry. I mean, it just makes no sense at all. So I just wanted to touch on that really quickly. As we roll into kind of what we're going to be talking about today. And I mean, that article does relate, which is household debt. That is a big portion of our household debt, student loans for many of us in America. But let's take a look at something that we can control, but we choose not to, because we're just so pressured to keep up with the Joneses, but the Joneses are in a whole nother world line. Seriously, the Joneses are so far ahead of you. You should not be trying to compete with them. The wealth disparity is that big. So stop trying to keep up with the Kardashians. The U.S. Cyber Monday sales to hit a record of $9.2 billion. So it says shoppers have already had nearly a month of offers and deals as retailers look to draw out their vital holiday season, which is 6 days shorter this year due to a late Thanksgiving. So it says that Adobe Analytics predicted that $72.1 billion was spent online in the month ending December 1st, and Cyber Monday, now traditionally the U.S. economy's biggest internet shopping day, had logged a 16.9% sales jump over last year. Adobe, which measures transactions from 80 of the biggest 100 U.S. retailers, said it marked down its prior $9.4 billion forecast slightly as more data came in. So it was a slight drop. It looks like it hit a $9.2 billion, but they were initially looking for a $9.4 billion forecast. It says Amazon.com and rivals such as Target Corp and Walmart were poised to benefit from the event, having beefed up delivery services to fulfill online orders more quickly. In-store pickup of online orders has become smoother. So I wanted to start with that side of the road, showing the consumer behavior here in the United States hitting a record high. And, while at the same time, this out of Zero Hedge shows us that household costs are spiraling out of control. And we're talking about more so the essentials that we depend on and need to spend our money on. They're just getting out of control. The costs of education are spiraling out of control, stripping households of income as an entire generation is transformed into debt serfs. Asset inflation created by central bank zero interest rate policies, which has inflated a second echo bubble in housing that has pushed home ownership out of reach for many, adding demand for rental housing that has pushed rents into the stratosphere in left and right coastal areas. So let's take a look at how wages aren't keeping up. So it says the cost of family health care insurance has been growing faster than inflation for years, making it harder for workers to win pay raises. Companies still pay roughly 70% of the price tag, but employees are paying much more in deductibles and their share of covered costs known as coinsurance. So take a look at this from 2006 to 2016. We've got workers' deductibles up 176%. Workers' coinsurance 67%, total covered healthcare costs 49%, and then we've got workers' wages only up 29%. Meanwhile, as you can see, the growth of the amount of physicians in our country versus the administrators. So it's a ballooned and bloated system that we're living in. And at some point, this stuff has to change, people. Student loan debt, back to that, is soaring above $1.5 trillion, guaranteeing profits to lenders and debt serfdom to the students exiting with degrees that are in oversupply, i.e. possessing little scarcity value in an over-credentialed economy. And let's not even mention the housing bubble, people. Like, if you just look at this Case-Shiller price index, can you believe that we are 40% higher in price index from the peak in 2007-8? Can you believe that in literally 10 years, we're up 40%? And honestly, if you want to do trough to peak, it's over 100% if we take the lows from 2009. So as all of these charts kind of indicate, guys, the Fed sits there in their white ivory towers, academia, and they say there's no inflation. Well, there is inflation, all in the wrong areas, in housing, in education costs, in healthcare costs. Like, the inflation is there. Prices have gone up, but maybe not at the rate that they're thinking would be considered a high inflation environment, but they're looking in the wrong places. And you would think they would understand this. With the way they injected money, it was injected from the top down. So with wealthier people, the wealthier class, the marginal propensity to spend is much lower than a consumer at the working class or middle class. They've already bought, you can only buy so much stuff, right, as an individual with money. However, what wealthy people do buy are stocks, bonds, real estate, and all that stuff trickles down. But don't worry, tides will turn. They cannot sustain in this manner forever. When? No one knows. I mean, for anyone to say specifically they know exactly when this thing is going to pop, this bubble, they're fooling you, and they're fooling themselves, because we've seen many smart people over the past 10 years on basically a audio loop essentially saying the same thing. Gold is going to go up. The crash is right now. The crash is imminent. The crash is coming. The crash. It's been 10 years of nothing but gains in the equity markets. Nothing but a bond bubble. Bond yields going lower and bond prices heading to the sky. But the best thing, in my opinion, is that, don't try to pick the top. It is probably best to slowly wean yourself off these overly inflated asset prices. Unfortunately, when it comes to 401ks, and this is another scam feature of the 401k complex, they don't let you get your money out. No, your money. So is it really your money? If you can't maneuver and go even to cash, many 401ks won't even let you go to cash within the actual program. Won't let you go to cash. So is this really your money? You have to think about that. And if you guys found this video informative, make sure you hit that like button. Leave me a comment. More importantly, I want to know what you guys feel about Senator Rand Paul and his proposal called the Helper Act. I can't believe this guy, man. And it's crazy because most of what Rand Paul initiative and his talking points are on, I agree with a lot of it. Not everything, but I'm just very shocked to see this type of proposal. Again, let me know your thoughts about all three of these topics in today's video. It's your boy Crypto Blood. That's my 2 cents. I'm out of here. Holla.
Mics and whole stages, destroying MC's dreams from work.